If you're a Canadian making between 50 and 80,000 a year and your savings are sitting in a TFSA instead of an RRSP, you're handing the CRA 2 grand a year for nothing. That's one of 8 money leaks bleeding the average Canadian household dry. $10,000 a year, gone. I'm going to walk you through every single one and show you the math. Wrong accounts, 2,000. Tax credits you never claimed, 1,500. Groceries, 2,000. Subscriptions you forgot exist, 1,000. Insurance and phone bills, 1,000. Government money sitting there unclaimed, 1,000. Interest you're paying for no reason, 1,000. And the one underneath all of it? No system. That's the multiplier. Here's the deal. Stay for the first 3 leaks. If I haven't put $1,000 back in your pocket by then, click off. Fair? Let's go. I'm Jay. Welcome to the Maple Finance. Quick disclaimer. I'm a money nerd, not a financial advisor. Talk to a professional before making big moves. Cool? Cool. This isn't a track your lattes video. Think of this more like a financial x-ray. We're scanning your entire money system, the Canadian tax structure, the CRA programs, the provincial stuff, and finding every spot that's costing you. 8 leaks, real dollar figures, Canadian-specific fixes for every single one. Let's start with the one most people get wrong on day 1. Leak number 1. And honestly, this one stings the most because it's completely invisible. You don't feel it, you don't see it on any bill, but it's there every single year. Canada gives you 3 registered accounts, the TFSA, the RRSP, and the FHSA. Each one has a different tax superpower, but most Canadians either pick the wrong one or worse, they don't use any of them. Here's the mistake. Let's say you make $75,000 a year. You put $7,000 into your TFSA. Great account, but you get 0 tax refund. Now take that same $7,000, put it in your RRSP instead. The CRA sends you $2,100 back. Same money, different door. $2,100 difference. It's like ordering a double-double at Timmy's but paying for 2 separate cups instead of 1. Same caffeine, twice the cost. You just picked the wrong line. So when do you use which? Here's the simple rule. If you're making roughly over $58,000 a year, RRSP first. Under that, TFSA first. That number is the first federal tax bracket threshold for 2026. Above it, your RRSP refund gets bigger. Below it, your TFSA flexibility matters more. And then there's the FHSA, the First Home Savings Account. This one is the cheat code. It's the only account in Canada that gives you a tax refund going in and tax-free money coming out. RRSP can't do that. TFSA can't do that. Only the FHSA. If you're saving for a home, open one yesterday. Here's your cheat sheet. Screenshot this if you need to. TFSA, no refund going in, but tax-free coming out. Best if you're under $58,000 or need flexibility. RRSP, refund going in, taxed coming out. Best if you're over $58,000. FHSA, refund going in and tax-free coming out. Best if you're buying your first home. Done. That's leak number 1 plugged. Up to $2,000 a year saved just by using the right account. And by the way, this one connects to leak number 6 later. The government benefits you're missing, they depend on which accounts you're using. We'll get there. Leak number 2. Every single year, billions with a B in tax credits go unclaimed by Canadians. The CRA doesn't chase you down to give you money. You have to ask for it. Most people never do. Here's what a typical Canadian tax return looks like. You claim your basic deductions, maybe your RRSP, maybe some medical stuff, and you stop. Meanwhile, 5 or 6 other credits are just sitting there, unclaimed, waiting, gathering dust like that treadmill in your basement. The medical expense tax credit alone is wild. LASIK surgery? Claimable. Therapy and counseling? Claimable. Gluten-free food if you have celiac disease? Claimable with a doctor's note. H&R Block says this is the most commonly missed credit in the entire country, and it's not small. If you worked from home at all, even part-time, you can claim home office expenses. The CRA gives you 2 options, the flat rate method, $2 a day, dead simple, or the detailed method, where you calculate the actual percentage of your home used for work. More paperwork, but usually a bigger refund. Charitable donations. This one kills me. You donate to your local food bank, your church, a hospital, and then you forget to claim the receipt. The credit is 15% on your first 200, then jumps to 29% on everything above that. Your old receipts from the last 5 years, still claimable. Go find them. And here's the part nobody talks about. You can go back and amend your tax returns from the last 10 years. 10 years! If you missed credits in 2016, 2017, 2018, the CRA will still accept them. Most Canadians have no idea this is even possible. That's a lot of money sitting in a drawer. Here's what you do. Log into your CRA My account. If you don't have one, set one up today. Look at your notice of assessment. Check what credits were applied. If something's missing, refile. It takes 20 minutes. That 20 minutes could be worth hundreds, maybe thousands. That's leak number 2 plugged. $1,500 a year for most people. We're already at $3,500 saved and we're just getting started. 6 more leaks to go. Leak number 3, and this one hits every single Canadian every single week. Groceries. The average family of 4 in this country now spends over $17,000 a year on food. That's up 27% in 5 years. $17,571. That's the 2026 projection from Canada's Food Price Report. Bread is up, dairy is up, beef is up 8% alone. And this isn't some luxury spending, this is feeding your family. Here's what a typical Canadian grocery run looks like without a system. You walk in hungry, no list, grab whatever looks good, $287. Gone. Now here's the same week with a 10-minute plan. Same food, same family. $194. That's $93 a week. Times 52, almost $5,000 a year. Step 1, and this takes 5 minutes, download Flip. It pulls every grocery flyer in your area into one app. No Frills, Freshco, Walmart, Superstore, all of them. You build your list around what's on sale. Step 2, Flash Food. Discounted food near its best before date. 50% off in some cases. Step 3, PC Optimum. If you're not stacking points on groceries, you're leaving free food on the table. And here's one people fight me on. Store brands. President's Choice, No Name, the yellow stuff. I get it, you grew up on Heinz, but blind taste tests show most people can't tell the difference. And the savings? 30 to 40% on the same items. Over a year, that adds up to over $1,000 for a family. I'm not saying never buy the brand. I'm saying check if you even notice. We'll drive 20 minutes across town to save 6 cents a liter on gas. That's like $4. But we won't spend 10 minutes on a free app that saves $200 a month on groceries. Make it make sense. That's leak number 3 plugged. Up to $2,000 a year saved on groceries. Running total? $5,500. Remember when I said give me 3 leaks and $1,000? We blew past that. 5 to go. You leaving now? Didn't think so. Leak number 4, the subscription graveyard. This is where your money goes to die. Quietly, monthly, automatically. You don't see it leave, you don't feel it leave, but it never stops leaving. Hard Bacon ran a survey on this. The average Canadian thinks they have 4 subscriptions. The actual number? 8. Double. And 66% admitted they'd been billed for something they completely forgot they were paying for. You might be one of them right now and not even know it. Here's the fix. Takes 15 minutes. Pull up your bank app right now, seriously, right now, and search for recurring charges. Sort every single one into 3 buckets. Use it weekly? Keep it. Use it monthly? Question it. Forgot it existed? Cancel it today. Not tomorrow, today. Streaming is the worst offender. Be honest. How many do you actually watch every month? You don't need 6 at the same time. Pick 2. Keep those. Cancel the rest. And here's the trick. Rotate. Netflix and Disney this month. Crave next month. You still watch everything, you just don't pay for everything at once. And the free trial trap. 73% of Canadians admitted to signing up for a free trial, planning to cancel, and then forgetting. The company knows you'll forget. That's the business model. So if you sign up for a trial, set a calendar reminder for 2 days before it ends. Not 1 day, 2. Give yourself a buffer. That's leak 4, dead and buried. $1,000 a year just by auditing what's coming out of your account every month. Running total, $6,500. Someone watching this right now just realized they're still paying for a gym membership they haven't used since January. You know who you are. Leak number 5. This one makes my blood boil. Canadians pay some of the highest cell phone and insurance bills on the planet, not the continent, the planet. And most of us just accept it. Look at this. Canadians pay among the highest cell phone bills in the developed world. In the UK and Europe, people pay half what we do, sometimes less. Same techs, same data, we're paying double, and we just keep paying it. Here's the script. Call your provider. Say these exact words. I'd like to cancel my plan. That's it. Don't explain, don't negotiate, just say cancel. What happens next is magic. They transfer you to the retention department. That's where the real deals live. The ones they never advertise. The ones that are $20 to $40 a month cheaper than what you're paying right now. Let's say you save $40 a month on your phone. That's $480 a year. Now do the same thing with your car insurance. Shop it around, get 3 quotes, pick the cheapest. Average savings, $45 a month. That's $540 a year. 2 phone calls, $1,020 back in your pocket. Per year, every year. 3 rules. Tattoo them on your brain. 1. Never auto-renew your insurance. Shop it every single year. Rates change, your driving record changes, the market changes. 2. Call your telecom provider once a year and say the magic word, cancel. 3. If you've got home and auto insurance, bundle them. Ask for the multi-policy discount. They all have one, they just don't tell you about it. Leak 5. Plugged. $1,000 a year from 2 phone calls and a yearly insurance shop. Running total, $7,500. And leak number 6. This is the one I mentioned in the hook. The one most people have no idea exists. That's next. Leak number 6. This is the one I teased at the start, the one most people have no idea about. Canada has dozens of benefit programs designed to put cash directly in your pocket, and millions of eligible Canadians never claim a single dollar. The CRA is sitting on a pile of money with your name on it. GST/HST credit, Canada Workers Benefit, climate action payments, provincial programs, and a brand new one launching in 2026. These aren't loans. They're not programs you need to apply for with a 20-page form. Most of them are automatic, if you file your taxes. That's the catch. File your taxes. Let's start with the biggest one, the GST/HST credit. If you're single and earn under $50,000, you get up to $533 a year. Couple, $698, plus $184 per kid under 19. That's the existing program. But starting in 2026, there's a brand new one, the Canada Groceries and Essentials Benefit. Just signed into law. A single person gets an extra $402. A couple with 2 kids, $805 extra. That could bring the total to almost $1,900 a year for a family, just for filing your taxes. Then there's the Canada Workers Benefit. This one is huge and almost nobody talks about it. If you're a low-income worker, single, you could get up to $1,633. A family, $2,813. And if you qualify for the disability tax credit, add another $843 on top. The CRA even sends you 50% of it in advance, 3 payments a year, so it actually feels like a paycheck. And then there are the provincial programs, and these are the ones people miss the most. In Ontario, the Trillium benefit combines 3 credits: energy, property tax, and sales tax, worth over $900 for some families. In BC, the climate action tax credit pays over $500. Alberta has affordability payments worth over $600. Every province has something. The problem? Nobody tells you. You have to look. Here's the key, and I cannot stress this enough. File your taxes. Even if you made 0 income, even if you think you owe nothing, even if you're a student, even if you're retired, even if you just moved to Canada, the CRA uses your tax return to calculate your benefits. No return, no money. It's that simple. Filing is free. Not filing costs you thousands. Leak 6, plugged. Up to $1,000 a year in government money you were leaving on the table. And remember what I said in leak number 1? The accounts you choose affect the benefits you qualify for. These two work together. That's 8,500 saved. 2 leaks left. Leak number 7. This one is a vampire. It feeds on you while you sleep, and it doesn't stop until you kill it. Interest. The average Canadian carries over $22,000 in non-mortgage debt, and most of it is sitting on credit cards charging 20%. And here's the part that breaks my brain. I've talked to people who have $5,000 sitting in a TFSA earning 4%, while carrying $5,000 on a credit card at 20%. That's not saving, that's losing 16% a year. You're paying the bank to hold your money hostage while they charge you interest with the other hand. 2 ways to kill it. The avalanche method, pay off the highest interest rate first, saves you the most money mathematically, or the snowball method, pay off the smallest balance first, feels better psychologically because you get quick wins. Honestly, both work. The worst strategy is the one most Canadians use, the one where you pay the minimum on everything and hope it goes away. It doesn't. One more weapon, balanced transfer cards. Some Canadian banks offer 0% interest for 12 months on transferred balances. That's 12 months of every single dollar going to the actual debt, not the interest. But here's the rule, you have to pay it off within that window. Don't transfer it and then forget about it. That's how the bank wins. Set a monthly auto payment and crush it in 12 months. Quick checkpoint. If you have 0 non-mortgage debt, congratulations, seriously. Skip ahead 60 seconds. The next part isn't for you. For everyone else, this might be the most valuable 60 seconds in the entire video. Don't skip this. Here's the priority list. Number 1, credit card debt. Kill it first. 20% interest is an emergency. Number 2, car loans, lines of credit, anything in the 5 to 8% range. Number 3, student loans. They're usually the lowest rate. The mistake? Paying extra on your student loan while your credit card bleeds you dry. Fix the bleeding first. Everything else comes after. That's leak 7, dead. Up to $1,000 a year you are handing to the bank in interest. Running total? $9,500. One more leak to go. And this last one, it's the one that holds all the others together. Leak number 8. And this one is different. There's no dollar figure here because this isn't a leak. It's the drain. Every single leak we just talked about, they come back every year, unless you have a system that catches them automatically. Without a system, you're plugging holes with your fingers. Eventually, you run out of fingers. Think of it this way. We just stacked 7 fixes worth $9,500, but without something holding them in place, they slide. You forget to file your taxes. Leak 6 comes back. You stop checking subscriptions. Leak 4 creeps in. You get lazy on insurance. Leak 5 returns. The system is what makes the savings permanent. Here's the system. I call it the Maple budget. 50% goes to needs, rent, groceries, transport, insurance, minimum debt payments. And look, in Canada right now, if that number is 55 or 60%, that's reality. Don't beat yourself up. 20% goes to future you, and this is where leaks 1 through 3 live, your TFSA, RRSP, or FHSA contributions in the right account, plus any extra debt payoff. 10% goes to wants. I call this the Timbits Fund. It's small, it's sweet, and you don't feel guilty about it. And 10% goes to a buffer, your emergency fund, and your leak plugging fund. Let me show you what this looks like with real numbers. $65,000 a year. After tax, roughly $50,000 take home. $25,000 to needs. That's about $2,000 a month for rent, food, car, insurance. $10,000 to future you. $833 a month split between your RRSP and FHSA. $10,000 to wants. $833 a month for restaurants, trips, whatever makes you happy. And $5,000 to the buffer. $417 a month for emergencies and plugging leaks. That's it. That's the whole system. And here's the free tool, your CRA My Account. Most people think it's just for filing taxes, but it shows your RRSP deduction limit, your TFSA contribution room, your benefits, your credits, everything. It's basically a free financial dashboard. Pair it with any simple budget app, even a spreadsheet, and you have a system that runs itself. No fancy software, no paid subscriptions, just you and the CRA. One last thing. Once a month, 15 minutes, sit down and run the leak check. Are my subscriptions still active and used? Is my insurance renewal coming up? Did my contributions go through? Are my benefits being deposited? How'd I do on groceries this month? 15 minutes, once a month. That's what separates the people who save $10,000 a year from the people who keep leaking it. That's leak 8, the foundation. The Maple budget is in place. All 8 leaks plugged. Running total over $10,000 a year. We did it. But I'm not done. Let me show you what this really means. Let me put it all together. Leak 1, write accounts, 2,000. Leak 2, tax credits, 1,500. Leak 3, groceries, 2,000. Leak 4, subscriptions, 1,000. Leak 5, insurance and telecom, 1,000. Leak 6, government benefits, 1,000. Leak 7, interest, 1,000. And leak 8, the system that holds it all together, $10,000 a year. Exposed, fixed, yours. But here's what most people miss. $10,000 isn't just $10,000. If you take that $10,000 every year and invest it, even in a simple index fund inside your TFSA at 7%, after 10 years, that's not $100,000. It's over $140,000. $140,000. That's the real cost of not having a system. Not 10 grand, 140. The difference between $0 saved and $140,000 saved is a system and 15 minutes a month. That's it. So here's what I want you to do. Drop your biggest money leak in the comments, the one that hit you the hardest. I read every single one, and I'll tell you which fix to start with. Seriously, try me. If this video saved you even one trip to a financial advisor, hit subscribe. I make videos like this every week, breaking down Canadian money strategies that actually put dollars back in your pocket. Not theory, real numbers, real savings. The kind of stuff they should have taught us in school somewhere between Confederation and Dodgeball. I'm Jay. This is the Maple Finance. I'll see you in the next one, eh?